What's up, network? Back again with another video, and today we're diving deep into one of the most important topics when it comes to financial growth: credit sweeps. Credit is the backbone of building wealth. If you want to grow your assets, make big moves, or unlock funding for your business, your credit profile needs to be clean and strong. The reality is, wealthy people don't just use cash. They leverage good credit to make money work for them. They take loans, secure credit lines, and use those funds to invest, generating even more income. But here's the catch: you can't leverage bad credit. Negative marks like late payments, collections, or fraudulent accounts can stop you from accessing the capital you need. That's where credit sweeps come in. In this video, we're breaking down the entire credit sweep process from start to finish: how to identify and remove negative items, how to file the right disputes, and how to make sure your credit report is cleaned up within days. Whether you're dealing with charge-offs, collections, or hard inquiries, we've got you covered. And it doesn't stop there. We're also talking about how to leverage a clean credit profile to build wealth, set up business credit, and take your financial game to the next level. Let's get into it. The first thing you need to understand when it comes to financial growth is getting your credit in order. Credit is one of the most critical elements in building wealth. Wealthy people aren't just relying on cash to grow their assets. They're leveraging credit accounts, loans, and good credit to open up new opportunities. They use these resources to fund investments that lead to more cash flow, and then they reinvest that cash flow to grow even more. It's a cycle of leveraging credit to build wealth. But to even start this cycle, your credit needs to be clean. You can't build on a shaky foundation. If your credit is cluttered with negative marks, late payments, collections, or fraudulent accounts, you're not going to get approved for anything substantial. That's where the credit sweep comes in. Now, credit sweeps are essential for removing inaccuracies, fraudulent accounts, or any other negative items that shouldn't be there. And here's the thing: credit agencies are not perfect. They make mistakes, and they often allow false information to stick around on your report even when it's clearly not accurate. That's why you have to take matters into your own hands. Alright, let's break down the process of removing any negative item from a FICO credit report within 4 days or less. Step 1. Obtain your credit reports and identify negative items. The first thing you need to do is get the most recent version of your credit report from all 3 major credit bureaus: Equifax, TransUnion, and Experian. You can download these for free directly from each bureau's website or through annualcreditreport.com. I recommend doing this regularly to stay on top of what's being reported about you. Once you've got the reports, go through them meticulously. You're looking for any accounts that have been charged off, collections, hard inquiries tied to those negative accounts, or anything else that looks suspicious or incorrect. Don't just assume everything on your report is accurate. Take your time and mark down each item that doesn't belong or needs to be removed. Typically, you're looking at accounts that are closed and marked delinquent, especially those that have been sold to collection agencies. Step 2, prepare your FTC identity theft affidavit. Next, head over to identitytheft.gov and create your unique identity theft affidavit. This step is crucial because it forms the backbone of your credit sweep process. You'll list every negative account that you want to challenge. If you have a lot of negative items, you may need to create multiple affidavits to ensure every single item gets addressed. Once completed, download the PDF of your affidavit and make note of your unique crime report case number. This affidavit is your proof that the negative items are the result of identity theft, whether that's truly the case or not. Step 3. Prepare your CFPB complaint. Now go to cfpb.gov and set up an account. You will need to file a complaint with the Consumer Financial Protection Bureau, CFPB, against each of the 3 credit bureaus. Make sure to include every negative item you want removed and any hard inquiries linked to those accounts. You'll file a separate complaint for each bureau: Experian, TransUnion, and Equifax. Detail in your complaint how the negative items are the result of identity theft and attach your FTC identity theft affidavit as proof. You can also include a copy of your credit report to highlight the negative items. Make sure you are very thorough here. Mention every single fraudulent item, hard inquiry, and any associated collections. Be clear and firm in your request for removal. The law is on your side with the FCRA Section 605B, which mandates that any item deemed as a result of identity theft be removed within 4 days of filing your complaint. Step 4. Follow up and ensure compliance. Once your complaints are submitted, the bureaus are legally obligated to remove those items within 4 days. If they don't, you have the right to file a Method of Verification dispute letter under FCRA Section 611. This forces the bureaus to prove how they verified the negative items in the first place. Most of the time, the bureaus will not be able to prove they verified the data correctly, especially since they didn't verify with the FTC. That's when they either remove the items or risk facing non-compliance penalties. Let's talk about real-world impact. Imagine you had a charged-off account from a credit card that's hurting your score. You file the complaint, submit your affidavit, and 4 days later, it's gone. Your score immediately improves, and now you're back in the game. This process is especially crucial if you're planning on using your credit for significant moves like buying a car, applying for a business loan, or even just getting approved for a decent apartment. Building from a clean slate. After the sweep, don't just sit back and relax. This is where you start building. You've got a clean slate, so you need to establish strong positive accounts immediately. Consider using your cleaned up profile as a personal guarantor PG for business credit. You can also focus on building your CPN file, adding authorized user trade lines, and setting up your LLC for business credit. With a clean credit profile, you can leverage those new lines of credit to invest, expand, and build wealth, just like the wealthy do. And don't forget, you can use your CPN alongside your business credit to unlock higher limits and better opportunities. If you want a more detailed breakdown or need help navigating your own credit sweep, hit up the network on Discord. That's the best way to get the latest methods and guidance. Telegram isn't as reliable anymore. And remember, everything we discuss here is strictly for educational purposes only. Use this knowledge responsibly and always stay compliant with laws and regulations. All right, let's keep it moving. Now that we've covered the basics of credit sweeps, let's dive into phase 1 of CPN building. This phase is crucial because it lays the foundation for your entire credit profile. If you don't follow these steps correctly, your CPN won't hold up when it's time to get approvals. Phase 1, CPN building. In this phase, we're going to cover everything from decoding your CPN number to attaching it to your name and merging it with the credit bureaus. We'll also discuss how to get it listed in public records and how to add those crucial trade lines that make your CPN look legitimate. Module 1, decoding your CPN number. The first thing you need to understand is that a CPN number should resemble a real Social Security number SSN. This means that the first 3 digits of your CPN should match the state where you intend to use it. For example, if you're in Georgia, your CPN number should start with digits between 252 and 260. This is critical because banks and lenders are trained to spot inconsistencies. And if your CPN doesn't match the state where you're claiming residency, you could face scrutiny or even be flagged for fraud. To get the correct prefix for your CPN, use the SSN decoding guide on Steve Morse's website. This tool will show you the proper first 3 digits for each state. Once you have your state-specific prefix, move on to the next step. Module 2, finding and creating your CPN number. After decoding the first 3 digits, you need to complete the 9-digit CPN number. Go to ssnvalidator.com and enter your chosen prefix followed by 6 random digits. Click Search. If the number you generated has been issued or is linked to the Death Master file, discard it and try again. You need a result that shows non-issuance and no records of issuance. This means the number has not been assigned to anyone and can be safely used as your new CPN. To double-check, use ssn-check.org to verify that the CPN number has not been issued. Once verified, write this number down and keep it safe. Module 3, attaching your CPN to your name. Now it's time to attach your new CPN number to your identity. This part is critical because it determines how well your CPN blends into the credit system. Start with your address. Use an address that has never been linked to you or your personal credit. Ideally, use a friend or family member's address or rent a mailbox from a UPS store or similar service. This ensures your CPN doesn't cross-reference with your real credit profile. Next, you'll need a phone number. Avoid using app-based numbers like Google Voice or Text Now. Instead, buy a prepaid phone from a provider like Metro PCS or AT&T Prepaid. Register it with your new address and use your real first and last name. Then, create a new email address that has no ties to your existing accounts. Use your real first and last name as part of the email for consistency, like john.doe11223@gmail.com. Finally, note down your basic profile info, including annual income $90,000 to $110,000, time at address 5 years 5 months, employment type self-employed, time on job 5 years 5 months. This consistency across applications makes your CPN look more credible. Module 4, try merging your CPN with credit bureaus. Try merging means establishing your CPN with the 3 major credit bureaus: TransUnion, Experian, and Equifax. This process involves creating a credit file that appears in all 3 systems. To start, apply for credit at sites like myautoloan.com, apply for an auto loan, badcreditloans.com, apply for a $10,000 personal loan, CapitalOne.com, apply for the venture card, AmericanExpress.com, apply for any American Express card, DriveTime.com, apply for an auto loan, RoadLoans.com, apply for an auto loan. The key here is to get a few denials from credible sources to create a record. Yes, you will be denied, but that's not the point. The goal is to generate hard inquiries and establish the existence of your credit profile. Within 3 to 4 days, your CPN should show these inquiries on your credit report, confirming that it's been tri-merged. Module 5, opting your CPN into public records. This step is essential to make your CPN look legitimate to lenders. Public records are where creditors verify your identity, so you have to get your CPN listed properly. Start with optoutprescreen.com. Opt your CPN into the public database. Listyourself.net. Register your CPN as a contactable phone listing. SageStream. Opt into the SageStream database to ensure your number shows up in public record searches. Next, sign up for rewards programs that will attach your CPN to public data like Best Buy rewards, Marriott Bonvoy, Delta SkyMiles, and this step helps your CPN show up in everyday data points, making it appear more genuine. Module 6, setting up CPN credit monitoring. And now that your CPN is set up, you need to monitor your progress. Sign up for creditkarma.com, Experian.com, WalletHub.com, IdentityIQ.com. These services will allow you to track your CPN score as you build it up with new trade lines and credit activity. Module 7, adding primary trade lines. Your first primary trade line should come from Self.Inc. This account will create a $500 primary trade line on your CPN report after about 2 weeks. Start with the $25 per month option and pay it consistently for 4 to 5 months to establish a payment history. Module 8, adding seasoned authorized user trade lines. Adding 1 to 3 AU trade lines from a reliable provider like Coast Trade Lines will add age to your profile. Age is more important than sheer volume, so pick 1 or 2 older accounts rather than many new ones. Module 9, rent reporting primary trade line. To add more depth to your profile, use a rent reporting service like paymentreport.com. These services will backdate up to 2 years of rental history, significantly boosting your score. Make sure the rent amount is reasonable and matches your stated income. Final steps, credit building and maintenance. Once your CPN has primary trade lines and a few AU accounts, keep monitoring it regularly. Avoid applying for too much credit at once to keep your profile from being flagged. If you encounter issues or need guidance, reach out to the network on Discord. We're here to help you build a solid, reliable credit profile and make sure you're moving strategically. Remember, this video is for educational purposes only. Use this information responsibly and in compliance with all laws and regulations. All right, let's pick up right where we left off at Business Funding Sauce. This is where you learn how to start your own business, how to get hundreds of thousands in business credit, step-by-step guides with links, access to business funding, trade lines, and business loans. What can this actually get you? We're talking about funding up to $300K, multiple lines of credit, mortgages, business bank accounts, and credit cards, approval on all major carriers for business accounts without using an SSN, like getting 10 to 25 phones per carrier, SBA loans, business vehicles like cars and trucks, gas, and fleet cards. And business credit is completely separate from your personal credit. It's based on your company's ability to repay its obligations, not your personal history. To build this kind of credit, you use your business's EIN or tax ID rather than your SSN. The main business credit reporting agencies that lenders look at are D&B and Experian Business. D&B has over 150 million businesses registered, and they create a credit profile using information from the business owners and vendors. They issue a PAYDEX score, which ranges from 0 to 100, with 75 or higher being good. They also issue a DUNS rating, which is based on your financial statements and the payment history reported by your vendors. One key thing to remember is that if your business has a high-risk status, it will absolutely destroy your ability to get credit. Experian Business, on the other hand, has over 14 million businesses registered. They use vendor-reported information to create an IntelliScore, which also ranges from 0 to 100. Same deal as D&B. You want to score 75 or higher. You need at least 5 trade references that report to D&B to get a strong PAYDEX score, and at least 2 that report to Experian for a solid IntelliScore. So what's the real advantage of having business credit? Imagine being able to access $50,000, $100,000, even $250,000 without needing a personal credit check or guarantee. Your success in getting these amounts is directly tied to your business credit profile and score. The better your profile, the more borrowing power you'll have. Building a good business credit profile means you're limiting the use of your personal guarantee. You'll be able to buy vehicles, purchase equipment, and prepare your business for future lending needs. You'll also separate your personal liability from the business itself. This is crucial because it means protecting your personal assets from any issues the business might encounter. Incorporating your business is the first major step in making sure your personal assets stay separate. We recommend using a corporation or an LLC because they offer limited liability for owners and officers, lower tax liabilities, 100% tax deductible insurance, and they help raise capital and build credit faster. Let's get into setting up your new business. Building business credit is a process and it takes time. You can't rush this because taking shortcuts is only going to hurt you in the long run. You're going to start by choosing a business name, making sure it's unique in your state. Avoid using names that include words like real estate or investments because lenders might see those as high risk. Always check online to see if your chosen name is taken on social media and make sure the domain name is available too. Once you've locked down your business name, it's time to pick a business address. No P.O. boxes, that's a huge red flag. You want to look as legitimate as possible, so either use a home-based address or, even better, a virtual office. For virtual addresses, you can use services like iPostal One or Anytime Mailbox. They give you a professional business address, phone, voicemail, and even a dedicated fax number.